Trading in Bitcoin or any other financial market is an extreme risk. I am not a financial advisor. Everything in this video is only my opinion and should not be taken as financial advice, but should only be seen as entertainment. In 2018, 3 years ago, I bought a certain amount of Bitcoin for $14,043. And today, I sold it. Stick around through the intro and disclaimer to figure out why, because in today's video, what I want to explain to you is what you should be looking for to exit your positions in cryptocurrency and also in other financial markets like the Forex market and the stock market. Some signs that the market you're trading may be primed to reverse and go the other direction. I'm also going to talk about why selling that position is not the end of the world. There are so many traders that think once they sell a position, they can't get back in, and then they get real upset with themselves if Bitcoin takes off to the moon. But there's ways around that, and there's ways to enter back into that position, possibly even at a better price. So we're going to discuss that too. And at the end of the video, I'm going to be explaining what I'm preparing for with Bitcoin based on my own personal analysis moving into the next few weeks. So if that sounds interesting to you, just go ahead and smash that like button for me to help out with the YouTube algorithm. Go ahead and hit subscribe and the notification bell if you are new, because we come out with new content like this each and every week. If you're already subscribed, then welcome back. Let's roll the intro. Okay guys, so the first thing we're gonna take a look at is my buy order from 3 years ago on Bitcoin. You can see that under fills right here, and you can see where I bought for $14,043. I'll reload the page real quickly. I say real quickly, my internet is kind of shitty right now. Oh, it did happen pretty fast. Okay, I'll zoom in on this now so you can see exactly where I bought in. Again, 3 years ago, I bought in at $14,043. And today I decided to exit. And what I want to do is show you the reason why. We actually just had a huge technical reason to exit this Bitcoin trade. So let's go over to the charts where I can explain this much easier. Before we take a look at the charts, there's a question I get asked all the time. And that is, does technical analysis work in the crypto market? And the answer to that is yes. Technical analysis works on any market that you can see through a candlestick chart. And let me explain something to you that helped me to understand this a lot better when I was first starting to trade. The candle charts that you see are not just candles and lines on a chart when you're drawing support and resistance, swing highs and lows. Those are not just lines on a chart and candles. What it actually is a visual representation of mass psychology. And what I mean by that is these charts are a visual representation of the decisions of every market participant on a particular chart. So in this case, it's every market participant trading Bitcoin at that exact time. So what you're seeing is the fear, the greed, the impatience, the resolve, the best wins that doubled an account, and the catastrophes of someone losing their entire account. And what you're seeing are the decisions made based on every one of those market participants. So because it's something we're gonna be talking about throughout the video, let me give you a quick example of this. The psychology behind a trending market will help you to understand. So in a trending market, what we see is buyers pushing a market higher. We then see sellers trying to push the market down, but buyers continuously stepping in at higher prices and pushing a market higher than its previous high. This is what is known as a trending market. Sellers try to push down, then buyers push up at a higher price than before, pushing the market into a higher price than before. And as long as this continues, you have a clear definition of buyers being in control. But the moment that this low is broken, the psychology behind this is that buyers are no longer interested in this particular asset, in this case Bitcoin, at a level higher than the previous low, which is a pretty good indication that we're not making it to higher highs, which is a good indication yet again that we're probably going to see a lower high and a lower low, and it's a likely scenario for a reversal in a particular market. And I wanted to go over that really quickly to help you understand the psychology of technical analysis and trends, because it is something we're going to go through today. And I know a lot of you may be beginners. By the way, if you don't understand technical analysis right now, I have a full video explaining everything you need to know about technical analysis. I'll put it in the top right hand corner of the screen. Now let's jump over to the Bitcoin chart and talk about why I decided to exit that trade today. So as I said, here on the chart of Bitcoin, we have a big indication that this market could be heading lower. If you're familiar with technical analysis and with trend identification, you may already see what I'm talking about. If you're not, let me help you out. So in a trending market, what we will see while the market continues to trend is the market making highs, lows, followed by higher highs, higher lows, higher highs, higher lows, and higher highs. As long as this continues to happen, we continue seeing higher highs and higher lows on any particular financial market, then that trend is considered to be in what we call an uptrend and has a very high likelihood of continuing that trend as long as this continues to be the case. One of the biggest indications that an uptrend is over and that we could see a reversal is when the market breaks through a previous level of support or the previous swing low. We can see that break right here. So if you look at the chart with me, you can see that we have a previous low here. This was our higher low. Then the market pushed down, and instead of being supported before breaking this higher low, the market actually broke and closed below that higher low. From a technical perspective, this is a huge indication that we could be seeing a reversal in this particular market, and in this case, in Bitcoin. Because what this shows us is a dramatic amount of selling pressure we have not seen in a long time. If you look back with me, every time we made a low, we ended up making a higher low until this point. Every time we made a high, we ended up making a higher high until this point. So with a combination of a new lower low, combine that with a new lower high that could possibly be the lower high before the breakdown, this gave me all I needed to see to exit this trade, and I'm not scared to take some profit. Never be scared to take profit, because you can get back into that trade possibly at a lower price. We're going to talk about that in just a second. Before we do though, this was the reasoning behind me exiting my trade today at close to the $54,000 mark. You see, if now what we have is bears or sellers taking control to the point that they push this market below the previous level of support, then that shows us that we could likely see a reversal and a start to trend down. Now, does this mean that I think Bitcoin's going to crash to zero? No, not at all. But do I think that we could have an extreme pullback here? I do. I think this could be a big correction that this market has been needing for a while now. So with that being the case, I want to get my money out of the market before that correction happens, because again, there's no reason I can't get back into this trade. So that's one way that you can take targets off, or one indication that may lead you to exiting a position in the crypto market or any other market you trade in, is when you see something like we have right now, the market breaking into new lows. Just remember that indicates a lot of selling pressure and that the bears could take over and start to push this market lower. It's not a guarantee, nothing in trading is, but it is a good indication that we could see a push down. That push down is not something I want to be a part of. This is the reason I exited my position. Another way, just to give you another idea of how to manage your position and do something we call trailing stops on cryptocurrency, is you could do that very easily if you do not quite have the technical analysis and trend analysis skills, by using something like the 50-period moving average. The 50-period moving average, while price is above it, oftentimes means that we're in a very healthy trend. When price starts pushing below that 50-period moving average is when you might want to start worrying that we're going to have a major correction in any particular market. And so just to recap, a couple of the ways that you can consider taking targets off, a couple of the indications that a market could start heading lower is either the break of the previous support level or the break below a moving average like the 50-period moving average. In this case, it's the exponential moving average. Really doesn't matter if you use exponential or if you use the simple moving average. Just to give you another example of this, we'll go back to the 2019 version of Bitcoin, where we have a huge bull run here from March of 2019. After this huge bull run, what happens? we push down, we start trading below the 50-period moving average. And no, of course, we didn't just go lower immediately, but once we start trading below that 50-period moving average, it's kind of giving us a hint that buyers aren't keeping us above that 50-period moving average. If that's the case, that means sellers are now pushing the market, pushing price lower than they have been previously. And with that coming together, it can give you an indication that the market's about to have a dramatic reversal like we did mid-year of 2019, pushing this market all the way down throughout February of 2020, close to the $4,000 range. So that's some things to look out for in a couple of ways. You can consider taking targets off on cryptocurrency and in any other financial market you trade as well. Now, why is it okay to take off profits? Let's discuss that for a second, because I know a lot of people that are getting into cryptocurrency are new. And with that being the case, you may be thinking that anytime you exit a position, the world's over. Oh no, I can't get back into Bitcoin if I exit right now, because what if it pushes higher? Well, there are ways to re-enter at higher or lower prices. If you still have the bias where you believe that Bitcoin's going as high as most people say and think and consider it to be going, then you can still enter in at higher prices. And a couple of the ways you can do that at higher prices, we're going to talk about how to enter at lower prices as well, is you can wait for this market to break into new highs. Another situation that could happen because of us crossing this 50-period moving average and the sellers semi taking over by pushing and breaking below this low is that Bitcoin could start to consolidate. A lot of times this is showing indecision. This is showing that the buyers aren't stepping in as soon as they have been previously. Previously, we were making higher lows. Now we're not. So buyers aren't stepping in as soon as they have been to make those higher lows. So it's already showing you indecision, which means that indecision could lead to a period of consolidation in this market. As this market consolidates, you don't want to be trying to trade during that consolidation. So what you could do, instead of trying to trade while the market bounces around, is you can wait until the market makes new higher highs above the 65-ish thousand level. And once that happens, you can wait for a pullback, get in at a value level like the previous level of resistance, and then you could continue your trading. You could continue riding this market higher if that's what it starts to do. The second way is actually getting a better price than you had initially when you exited your position. That's my plan. So what I'm planning to do on Bitcoin is right now where we're at, according to my technical bias, what we could see is a further push down. If we see a further push down, I'm going to be looking in this level right here for possible buy opportunities between $40,000 and $45,000. I'm going to be looking for buying opportunities on Bitcoin because I see that as a value level. So if we get down to this level, I'm getting a value by getting Bitcoin in this area. I also see it as a level that I do believe the market could head higher from. The reason being, previously, market participants in Bitcoin used this level as resistance and as support. If they've used it as resistance and support in the past, it's very likely that they will use it as resistance or support again in the future. So if we get down to this level and I see some buying pressure, I will willingly buy here around $40,000 and $45,000 on Bitcoin. Now, what's different between me and some complete beginner that's trading is that I'm not investing in cryptocurrency. It's way too speculative for me to have any kind of large sum of money into it for a very, very long time. Instead, I'm trading in cryptocurrency, and a lot of beginners don't know the difference between the two of those. If you are investing, you're holding, you're hodling, whatever they call it nowadays, right? You want to buy and you just want to hold, and you're pretty much at this point, because of how speculative cryptocurrency is, hoping and praying that it continues to go up. You believe in it though. And if you have that much belief in something, then feel free to keep your money in it. I'm not here to tell you what to do with your money. But from a trader's perspective, if I purchase Bitcoin, buy at any point between $40,000 and $45,000, I'm going to have a stop loss right below $35,000, $36,000. What I mean by stop loss is I'm going to limit my risk. I do not want to be in this if we continue lower past my zone. If we get below $40,000, I don't want to be in Bitcoin anymore until my next area of value. I just want to jump in here real quick, guys, and say that the biggest difference between professional traders and beginners is the fact that professional traders normally have a maximum amount that they are going to risk. And the difference is beginners that are in the cryptocurrency market right now, a majority of them have just went in with their life savings with no risk management plan whatsoever. And so far it's worked out great because cryptocurrency has been going up, but they are not used to the cryptocurrency market or any market having a large crash in way of a major correction. And that is something that it's not if it will happen, it's when it will happen. So what I'm trying to stress here is that it's important to have some kind of risk management in your trading. This is the difference between a trader and an investor. I'm not looking to hold Bitcoin forever. I don't need this to go to the moon. I want to get in and get out with a quick 3 to 4 to 1 based on my risk. So if I'm risking, let's say 10,000 per Bitcoin, then I may look for a $20,000 or a $30,000 push higher. So if we're at 45, I may look for it to get to 65 or 75 for my potential outcome. And with markets as volatile as the cryptocurrency market is, that is something that is a very, I'm not going to say good way to trade because I'm not giving you financial advice at all. It's something I've found to work very well in really volatile markets, because you may have losers hitting the small loss multiple times, right? What if I get 2 of these in a row? Oh no, I have 2 losses. I know how to manage my risk, which is also something that most beginners don't do. But as I'm managing this risk, I have 2 losses. That doesn't bother me. And then I get this huge win, and it takes care of those 2 losses plus puts money in my pocket. That's the way I look at all financial markets that I trade, outside of Vanguard funds and a few handpicked stocks that I have in an actual investment portfolio. But I separate my investment portfolio from my trading portfolio. So if you were someone who's confused about that, trading is not buying and hoping. Trading is having a set plan, and even investing, you need to have a set plan where you have a stop loss that limits your risk. And if you can do that consistently with a limited risk and a nearly unlimited reward, with the way cryptocurrency tends to just bang off at times and take, did I just say bang off? Oh God, I hope I don't get flagged for saying that. When cryptocurrency just takes off sometimes, you can easily get big reward to risk situations as long as you limit your risk. So as for my plans, what I'm waiting on for this market is either this market to come down and hit this level that I see as a major level. And if it does, I'll look for buying pressure. Buying pressure is very simple. What I look for in terms of buying pressure could be as simple as a big green candle that closes above the previous candle. It could be a double bottom price action pattern. It could be some kind of engulfing candlestick pattern, a hammer candle. Buying pressure. At any sign of buying pressure in this zone is where I will be purchasing Bitcoin again if we get down there. Now, trading is about being prepared. It's not about predicting the future. I don't know what Bitcoin's going to do right now. If I did, I'd already be a multi-billionaire. No one does. No one knows what Bitcoin's going to do at this exact moment. But what we can do as traders, as intelligent traders, is prepare for whatever it does. I just talked to you about my preparation for if Bitcoin continues lower. If that's the case, my preparation is waiting for the market to get between $45,000 and $40,000 and then buying up some more Bitcoin with a set risk and capitalizing on the next big move if it happens from this area. The next preparation I'm going to do is, what if that doesn't happen? What if we don't get a push down and Bitcoin continues higher? If Bitcoin continues higher, we've already looked at this a little bit, but if we continue higher here on this Bitcoin chart, I'm going to be waiting on a break into brand new highs. After that break into brand new highs, I'll be waiting for either a pullback into those brand new highs. If we don't get a pullback that far, then I will be waiting on a very shallow pullback and a breakout trade. I actually have a full video that's about 3 different pullback strategies I use. One of them is a breakout strategy I call a pullback strategy because it's a shallow pullback that oftentimes, if we get a break of that resistance, I'm going into a lot of detail here, then we get a big move to the upside. So if you want to learn a little bit more about that, they'll be in the top right-hand corner of the screen and linked in the description. But just to show you how prepared you need to be as a trader, also, at this point, what if the market breaks below this level? Oh no. Well, now you need to be prepared for that as well, right? So be prepared beyond what you think you need to be prepared. If we get, just to show you my idea, if we get a push down here and then I get an entry and I'm stopped out, my next level that I'm looking at for possible trades is going to be between $30,000 and $33,000. At that range, I'll look for buying pressure again. because it's a level that was used previously as support, which means it might be used as support again. There's a high likelihood that it will. With all of those factors coming together, it's a place I would put an entry if I saw buying pressure. I would have a set risk to minimize my risk, and I would let the reward go until something like the break of a 50 EMA or the break of a structure level looking left, because that's when I'm seeing that selling pressure again. Hopefully that's tied everything about this video all together for you, is buying with a set amount of risk and then trailing your stops either by waiting on that previous support level to break like we talked about earlier in the video, or waiting on the 50 period moving average to get broken below. Both of those cases indicate selling pressure, and you probably don't want to be long in the buying situation during a time when the market starts to sell off. So that gives you an opportunity to have an objective rule for selling your position in cryptocurrency and in other financial markets. I hope you enjoyed it. If you did, leave a comment below and let me know if you want me to continue doing videos about cryptocurrency and my own cryptocurrency trades. This channel is mostly built around Forex, but if you guys would like some more cryptocurrency content, just let me know. I can go over the Coinbase Pro account I have and how you use it to set stop losses, profit targets, how you use it. I don't even know if you can trail stops in there at the moment. I just do it by looking at the chart every day, but I can show you around those charts. I can also show you a little bit more about the cryptocurrency trades that I'm in and plan to be in the future. If that sounds interesting, comment below, let me know. Make sure you click that like button if you enjoyed the video. Make sure to subscribe if you are new, and I'll talk to you in the next video. See you guys soon.